Have you ever felt like the stock market is some kind of exclusive club with a secret language? Well, guess what? It's really not. Today, we're going to pull back the curtain and demystify the whole thing. We're breaking down exactly what it is and how it all works, nice and simple.
So let's jump right in with the most basic question, right? When you hear stock market, what picture pops into your head? Is it just a bunch of numbers flashing on a screen, or maybe people yelling on a chaotic floor? It can seem like that for sure, but at its heart, it's actually much, much simpler.
You know, the best way to think about it is to just picture a big, busy bazaar. You've got buyers, you've got sellers, and everyone's trying to get the best possible deal. But here's the twist. Instead of fruits or spices, they're trading shares, which are just tiny little pieces of ownership in big companies. That's it. It's a meeting place.
Now, that whole bizarre image is perfect for the idea, but the reality today looks a bit different. You can forget all the shouting and the frantic hand signals you see in the old movies. Today, that entire marketplace lives online. It's all digital, running on some seriously powerful computers.
And that brings us right to the heart of the modern market, the stock exchange. This is the official, high-tech, digital version of that bazaar we were just talking about.
So, at its core, a stock exchange is just a regulated platform. It's where companies can list their shares to raise money and where everyday people like you and me can buy and sell those shares. It's the essential link that connects all of us to a little piece of ownership in some of the world's biggest companies. Okay, so we know where stocks are traded. But here's the big question, the one everyone wants to know. Why on earth do the prices go up and down all day, every day? What's the engine driving all that movement?
Believe it or not, it all boils down to one of the first things you probably learned in economics class, the simple law of supply and demand. Seriously, that one concept is the pulse of the entire market. Let me show you exactly how it works.
All right, let's make this real. Imagine a super popular tech company announces they're about to launch a game-changing new gadget. The news is everywhere, everyone's buzzing, and people are getting really optimistic about the company's future. So when that good news hits, what happens? Suddenly, way more people want to buy a piece of that company than want to sell it. The demand is high, but the supply of shares for sale is limited. So naturally, the price gets pushed up. Simple as that. But let's flip the script. A few months go by, and now that same company releases a report showing that profits weren't so great. Or maybe that amazing new product actually has some major flaws. The whole mood just changes. And right here, you see the other side of the coin. The uncertainty kicks in, and now there's a rush to sell. You've got more sellers than you have buyers. This flood of supply drives the price down as sellers start competing to find anyone to buy their shares. It's this exact push and pull happening every single second of the day.
So now that we get the why behind the price swings, let's zoom in and look at the where. Here in India, there are two main arenas where pretty much all of this action happens.
Okay, let's take a look. We've got the Bombay Stock Exchange, the BSE. This one's a real veteran. It's the oldest stock exchange in all of Asia, started way back in 1875. Then we have the much younger National Stock Exchange, or NSE, which has become a massive player. You'll see their main indexes are the Sensex for the BSE and the Nifty50 for the NSE. Just think of those as quick scorecards that track the top 30 or 50 companies to give us a snapshot of how the market is doing.
And to give you a sense of the sheer scale we're talking about, get this. The total value of all the companies listed on the BSE is around 460 lakh crore rupees. That is a mind-boggling number. It's the combined worth of over 5,000 businesses, all in one place.
And the NSE is right there with it, at about 455 lakh crore rupees. The amount of wealth that's represented and flowing through these two digital markets every single day is just immense.
And hey, while the BSE and NSE are the big dogs for stocks, it's cool to know that India also has other specialized exchanges. You've got places like the MCX for trading things like gold and silver, or the NCDEX for agricultural products. It's a huge world out there.
So we know the what, the why, and the where. Let's get to the fun part, the how. How does your decision to buy a share actually become a real trade? Well, the process is actually fascinatingly fast.
Check out this journey. First, you hit buy on your broker's app. Instantly, that order zips over to the exchange's supercomputer. That computer then scans for a matching sell order. The second it finds a match, bam, the trade is executed. We're talking fractions of a second. Then, the official transfer of money and shares happens the next business day. It's an incredible process.
Now, when you place that order, you've got two main choices. A market order basically screams, get me this stock right now at whatever the current price is. It's all about speed. A limit order is more patient. It says, I only want to buy or sell this stock if it hits the exact price I've set. It's all about precision.
Whew, we've covered a lot of ground, from the basic idea of a market all the way to how a trade actually happens. So, what does all this mean for you?
It means that you are now officially equipped. The mystery is gone. You understand the basic language and the logic behind this powerful financial world. You are absolutely ready to think about what's next.
But before you do anything, and this is probably the most important thing I'll say today, knowledge is your absolute best friend. Investing can be amazing, but there are always risks involved. Always do your own research before making any decisions.
So, let's wrap it up with the three big takeaways. 1. A stock exchange is just a modern digital bazaar. 2. Prices move because of that simple, powerful dance between supply and demand. And 3. The whole process is a super-fast, computerized marvel.
You've already taken the biggest step just by watching this and getting the fundamentals down. The door to this world is now open for you. So, the real question is, what's your next step going to be? What will you do with this knowledge to learn even more?